Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Welcome to The Explainer. Today, we are digging into a question that could seriously save you thousands of dollars on your taxes. Can you claim relatives who aren't U.S. citizens as dependents? You know, the rules can get a little tricky, but getting your head around them is so important. Let's break it all down.
All right, let's jump right in with a real-world situation. So picture this. You're single, you're financially supporting your parents and your teenage niece, and they've all just moved to the U.S. to live with you. The big question is, can you claim them as dependents? Because the answer could mean a whole lot of money back in your wallet.
So before we get into all the nitty-gritty rules, let's talk about why you should even care. I mean, why is this so important for your bottom line? Because claiming a dependent is way more than just ticking a little box on a form. It can completely change your entire tax picture.
Getting to claim a dependent can unlock some major tax savings. If you're single, it could let you file as head of household, which right away puts you in a lower tax bracket. Plus, it opens the door to all these amazing credits, like the child tax credit or the $500 credit for other dependents. I'm telling you, this stuff can add up to thousands of dollars.
Okay, but hold on. Before we even start dreaming about those benefits, every single person you might want to claim has to clear the very first and honestly, the most important hurdle. They have to be considered a U.S. resident for tax purposes.
And this is a super important point. We're not talking about immigration status here. It doesn't matter if they have a green card. For the IRS, resident alien is a specific technical term, and it's all based on something called the substantial presence test. Really, it just boils down to how much time they've physically spent in the U.S.
So how does this test work? Well, first, the person has to be in the U.S. for at least 31 days in the current tax year. And second, they need to hit a total of 183 days over a 3-year period. The IRS even has this special formula for it, where they count all of this year's days, a third of last year's days, and a sixth of the days from the year before that.
But, and this is a big but, there's a huge exception to this rule. If someone is here on certain visas, like a student visa, the days they spend here often don't count towards that 183-day total at all. This little detail trips up so many people, and as you're about to see, it's a real game changer in our case study.
All right, so let's say your relative clears that residency hurdle. Great. Now the IRS gives you 2 potential ways to claim them as a dependent. They can be either a qualifying child or a qualifying relative.
Now, the rules here are crystal clear. You have to, and I mean have to, try the qualifying child test first. If they fit those rules, boom, you're done. If they fail that test for whatever reason, then and only then can you move on to the backup plan, which is the qualifying relative test. Okay, time to get our hands dirty. Let's apply all these rules to our case study. We're going to take the niece and the parents through these tests, step by step, and see who actually makes the cut.
And just like the rules say, we have to start with the niece. We're going to see if she can pass the 4 checks to be a qualifying child.
Let's run through the list. Relationship, she's your niece. Check. Age, she's 15, well under the 19-year-old limit. Check. Residency, lived with you more than half the year. Check. And support, you're providing more than half of it. Check. So it looks like she's sailed through all 4 tests. But wait, there's still that one big catch we talked about earlier.
Yep. Even after passing all 4 of those tests, it all comes down to one single question. Does she meet that substantial presence test? Because if she's here on a student visa, her time in the U.S. probably doesn't count, and you can't claim her. But if she's on a different type of visa, she just might qualify. See? It all hangs on that one little detail.
Okay, now for the parents. This one's easy. They're definitely too old to be a qualifying child, so that test is a non-starter. We can go straight to path number 2, the qualifying relative test.
This test has 3 main parts. First up, relationship. They're your parents, so that's a definite pass. Then there's the gross income test. We'll get to that in a sec. And finally, the support test. You're covering more than half their expenses, so that's a pass too. So far, so good for the parents.
So that crucial income test. To be a qualifying relative, a person's income has to be under a certain amount for the year. Back in 2023, that limit was $4,700. In our story, the parents had 0 income, so they passed this test with flying colors. This means they meet all the rules to be claimed as your dependents, as long as they also pass that main residency test we started with.
Okay, let's pull all of this together. What have we learned, and what does it all mean for you if you're in a similar spot, supporting family who've come from another country?
So what's the final verdict? Well, for our taxpayer, the parents are a clear yes. They can be claimed as dependents. That unlocks great benefits like filing as head of household. But the niece, her situation is a big maybe. It's a perfect example of why you've got to pay close attention to those residency and visa rules.
And here's another huge takeaway a lot of people don't know. Your relatives don't actually need a social security number. They can apply for something called an ITIN, an individual taxpayer identification number, right from the IRS. It's just for tax stuff, and it's all they need for you to claim them as a dependent.
So here's the bottom line. If you're supporting family, please don't just assume you can't claim them because they aren't citizens or don't have a social security number. Now you know the basic tests. You can dig into your specific situation and see what the rules say. Because if you don't, you might literally be leaving thousands of dollars on the table.